Good morning, everyone. Thank you all being in our channel today. Today is May 29th in 2022. Walmart is stocking more half gallon of milk for shoppers who cannot afford a full gallon. Procter & Gamble is touting the dish soap bottle that allows customers to save money by extracting every drop. Michaels is carteling the marketing of a high-priced craft tools that shoppers may no longer be in the mood to buy. Many of the companies whose mission is to know the U.S. customers are bracing for a shift in the spending as inflation rises and the stock wobble. They are bringing back more bargains, cheap store brands, and rewards programs for shoppers who want to save where they can, even as some continue to spend robustically on everything from appeal to pet food. As investors, maybe you noticed that in the past several weeks, U.S. consumer sectors, all the companies' stocks are plunging, and even like Walmart, Costco, and Target price, the stock prices are decreased dramatically. In today's episode, I wanted to talk about what is going on, how does this really happen, how this phenomenon going to impact our future investing. Let's get started. As you may see from last week, before the earning report, even after the earning report of Walmart, and Walmart's stock price are decreasing dramatically. Even though as an individual investor, I did do short the stock, but I'm still not sure if I want to see this dramatic dropping gonna continue or gonna affect another sectors. The new product selections, prices, and marketing from some of the country's biggest consumer brands and retailers are the latest sign of how the price of inflation and the Fed Reserve's recent decision to raise interest rates are up depending daily life for many Americans. Does this really going to affect our future investor in these sectors? From the data I see this morning while I'm taking care of the baby, I'm thinking maybe this is a good time I can point it out and then give some investors some ideas where we are at. From the data actually showing on top of the corner I show you here, many shoppers actually, especially from wealth household, still have a plenty of spending power in United States, or I should say in the North America. According to the data released Friday by the Commerce Department, and overall retail sales remain actually strong, as you may see over there on the top. But consumers' sentiment has dropped to its lowest level in more than 10 years. According to this data from University of Michigan, released actually last Friday, this Friday, the savings rate has actually also dropped in recent months below 10-year average before the pandemic. And borrowing is literally up, a possible sign that consumers are using debt to make large purchases, such as new cars, even some of the machines or fridge, even ovens or stuff like that. It tells us inflation is currently the largest force, straining some customers, especially for the middle or low income households. Some retailer CEOs mentioned that as prices rising for the food, cars, and even rental or gas, lower income consumers likely burned through their savings late last year as the customer sporting as a federal sporting check or stopped. Here's one big retailer, Target, actually said it was surprised by the new consumer behavior while we anticipated a post-stimulus shutdown in the past. They are experienced that they didn't anticipate the migrant of the shift. That's why in the result of the earning report is so terribly impact their price. The stock price. Target ended up with too many TVs, kitchen appliances, which led to the discounting. The CEO said, actually Target didn't just prepare for this. Then there's actually shopper even saying on the interview saying, there's definitely some shopping behavior changed. Kelly stopped buying Pokemon trading cards. You know, those little kids, they always buy those cards and make an exchange. They say it's quote unquote, it's the kids investment. However, actually they are stopped buying it because their parents are getting poor. So here it's a very unexpected. Well, a lot of investors are worried about the recession coming, especially in this consumer industry. I just want to point it out. I don't think we are in that stage yet. Maybe in a couple of second half of the year, or maybe next year. I don't know. But for currently, I don't see there's recession are coming in, especially for the consuming sectors. Here's the data I just wanted to show you. Here is the US retail ROAS. Basically, this is showing that the seasonally adjusted sales from the chart that shows or indicates in April 2022, there is a $677 billion or retail spending over here. We are still on the top of the record in the last 10 years. Here's the recession, as you may see, that is the pandemic happens in the past of 2 years. During the pandemic, this data really decreases and plunging to the lowest, even below the 400. And then today, actually in today's data, we are on the top of the record. So I don't see somehow, from my perspective, I think let's do this. Let's say this consumer sentiment or data showing that retail sales actually going up, seasonal sales actually still up. However, because of the CPI, which is consumer price index, that is actually on the toppest in the past 10 years, which is come to 8.2% in this month. Because of this CPI hiking, our consumer sentiment is decreasing. However, as I mentioned in the beginning of the news, there's a couple of data I was reading. There's just a gap between low incomers and high income household. High income household are still showing the purchase power, but there's a middle income or low income person or people are actually seeking for alternative choice. For instance, if you can see, we can check whatever the stock price is showing exactly matching the data I'm trying to show here. Lower income people are trying to save. What that means? That means lower income people are trying to save money, spend carefully. But at this period of time that wealthy people, they are still purchasing stuff. Because of this kind of balance that the data is showing still on the top of the chart. So if you're worried about the recession, maybe I would say it's not going to happen in short term. Maybe next year will be coming, who knows? However, in this segment, in this period of time, we are still safe. Let's come back to the stock chart and see how this phenomenon is related to the stock market. Let's see, here's the Walmart stock market, a stock price. As we can see in this area, $150 area. If you follow me in the group, then we can see I was shorting at this area until it came down to the $117. That in here, that point, I was actually buying the stock and going up. Although I didn't buy the shares, I just bought the calls, which is the option. And let's see, this is really interesting. That's why I want to show everybody TJT, which is the target. Let's see the price. It's exactly showing the same strength and weakness. And then chart flow is the same as Walmart. You can see this area we are shorting and people are shorting at this area. However, just want to see you after another major retailers, after those earning report released, we can see they all coming back. That's the reason I wanted to show you today's data. Our industry is not as bad as people are thinking. However, the consumer behavior are changing. How they are changing? Target and Walmart and even Costco, they are actually, Costco is different. We can talk about later if you want, but Target and Walmart are kind of like different. Let's see the Macy's. The Macy's, this is right after the earning report released. Macy's is not doing bad. Actually, they are doing pretty well. And Macy's, let's see this stock, even Nordstrom. They are doing fantastic job actually. After the ER, the stock price is going from $20, now it's $26. I say there is more opportunity to come in and we can buy the stock to make some money here. Why? As the data showing, the wealthy people, they are kind of shifting from, they are still have a strong consuming buying power. That's why those stocks are doing pretty good right now. Then if you see the Dollar Tree, or let's see Dollar General or Dollar Tree, those are actually middle income, class income people. They are shifting from Walmart. They are coming to the dollar store, try to save some money. So this, as you may see last week after the stock released, the earnings releasing, this is going up and up. So exactly the same chart that Dollar General showing. So Dollar Tree is even getting better here. So they are going back, and then there is a chance even going up and up. So to summarize of this small episode, I just want to see that consumer industry is not as bad as we thought. Actually, U.S. retail sales, seasonal sales are still strong and in the high range of the numbers. So maybe there is a chance that for next week or next 2 weeks, then we can take this opportunity to invest those in short term, that we can, for instance, Target and Walmart. I have the Walmart position, which is a call options. I'm still holding it. And Target and even the cost, Dollar Tree or Dollar General, they are still have an opportunity to invest it. Even the Macy and something else that we are thinking I'm thinking gonna do some short-term invest in the future. Hopefully this short video can give you some ideas and see what is going on in consumer industry. We always being cautious and see how the whole SPY index that are coming along. All right. Thank you so much for watching today. Hopefully we can meet you in next video.